So good evening students, welcome back to my channel. So today I am going to discuss regarding basic accounting concepts. Okay, so there is business entity, money measurement, going concern, accounting period, cost concept, dual aspect, then revenue recognition, that is realization concept, matching concept, accrual concept, full disclosure, consistency, conservatism or prudence, materiality and objectivity. Okay, so this, okay, the tick mark ones, okay, I have discussed in my earlier videos. Okay, you just check out. Okay, I have discussed business entity and given the notes. Money measurement I have discussed, accounting period, okay, cost concept, matching, full disclosure, conservatism and materiality. Okay, you just check out. The remaining ones today I am going to share, okay, with you all. Here you see going concern. Going concern means the business will run year after year. Okay, there will be no end of the business in the near future. Then there is dual aspect. Dual aspect means every transaction has a debit and has a credit. Okay. Then there is revenue recognition or realization principle or concept. Okay, so it is said in this concept that revenue should be recognized when it is earned, not necessarily when cash is exchanged. So in an accounting year, okay, if revenue is earned, okay, then it is to be recorded in the financial statements. Okay, irrespective of the fact when the cash is exchanged. Okay, suppose a grocery shop recognizes revenue when customer purchases groceries. Okay, so if the purchase is made on credit, okay, then also it is recorded in the accounting year. If it is purchased in cash, then also it is recorded in the same accounting year. Okay, then what is said in accrual concept, that recognizing revenues and expenses when they are earned or incurred regardless of when the cash is exchanged. Same like revenue recognition. In revenue recognition concept, only revenue is, okay, considered. Okay, in accrual concept, both revenue and expenses are considered. Okay, so here in revenue, in accrual concept, okay, revenues are recorded, okay, when they are recognized, as well as expenses are recorded, okay, when they are incurred, okay, regardless of when the cash is exchanged. Okay, if the cash is exchanged in future also, then also in the accounting period when the revenue, okay, and expenses is recognized, is to be recorded in the financial statements. Got it? So you can see some two examples I have given, like accrued salaries and wages, accrued interest on loans, okay, that we enter in the PL account of the accounting year in which they are recognized. Okay, so that is said in accrual principle. Then there is consistency principle. In this principle, okay, year after year the accountant is following the same policy or method, okay, to record financial transactions in the financial statements or while preparing the financial statements. Okay, so in suppose depreciating assets of the company, if the method straight line method is followed, then year after year the straight line method will be followed. Okay, that is said in consistency concept. And in objectivity concept, it is said that the financial information should be unbiased. okay, that is free from any kind of fraud. Okay, there should not be any mistake or there should not be any fraud, okay, as per the objectivity principle in accounting. So I hope you have got the concept. Okay, 14 concepts of accounting concepts. Okay, basic accounting concepts. Okay, so if you like my video, please subscribe to my channel. Thank you.